on liquidated and delinquent account reporting, otherwise known as year-end AR reporting training. Today, we will be going over definitions and the terms used in the reports, as well as year-end reporting requirements, the Legislative Fiscal Office reporting overview and website entry instructions. We'll discuss some LFO reporting scenarios, as well as next steps. Our first definition is abated. This is an account that has been determined not to be owed, and an example is an offer in compromise where a portion of the debt is paid and the remaining portion is waived. The portion that is waived by the agency is the abated part of the account. Example 2 is an account in discharge from bankruptcy. The account has been abated because the court determined that the debt no longer exists. Note that accounts that have been written off that are still fully collectible are not an abated account. The term account refers to the debt relationship between a state agency and an individual or entity, which may include multiple obligations and time periods. Adjustments. These are entries that can increase or decrease a debt and may be required to correct things such as an administrative error or when the debt is abated, legally determined not to be owed, such as in a bankruptcy or offer in compromise. Note that adjustments do not include write-offs. Delinquent account. This is one where the payment was not received by the original due date. DOR program codes. The restricted program code are those accounts assigned to the Department of Revenue for collection using their offset only or tax refund intercept. Whereas the unrestricted program code are those accounts assigned to Department of Revenue for full collection, and they're using their services such as writing letters, making phone calls, issuing garnishment, skip tracing, and includes offset. Fiscal year, we're probably all familiar with. This is July 1 of one year to June 30th of the next. Fund types. You'll be reporting in the LFO website the accounts by fund type. So federal funds is the term used for money that a state agency receives directly from the federal government. General fund is the money appropriated by the legislature to a state agency or statutorily designated as general fund. Lottery funds are monies received by a state agency from lottery proceeds. Note that the lottery funds would not be something that you would report for accounts that are through a program that is funded by lottery funds, but once you receive those lottery funds, they become something like other funds. Other fund money is that which is received by the state agency from sources other than the general fund, federal funds, or lottery funds. And other funds passed through are those funds collected by a state agency that are then remitted directly to another entity. This could be things such as child support or restitution or student health insurance premiums. Liquidated account. In general, an account that has where the exact past due amount is known and the debtor has been notified of the debt and given the opportunity to dispute the debt is considered liquidated. Refer to OAM 353030 for a full definition. OAM, also known as the Oregon Accounting Manual. This is the set of state policies regarding fiscal administration for state agencies. Receivables. Amounts owing to the state, including accounts receivable, loans, notes receivable, and interest. Receivables can be due from private persons, firms, corporations, other agencies, employees, the federal government. Note the full definition is in OAM 65.00.00. Reversals. Any account in the associated debt previously reported as liquidated and delinquent that no longer meets the definition of liquidated and delinquent as of June 30th. For example, if the debtor has disputed the debt while it's under review, it is not considered liquidated. Another example of when an account is used or reported as a reversal is when it was previously reported under the wrong fund type. So let's say in a previous year, the agency reported a debt under general fund, but now it should be reported as other funds. To correct the prior year, the agency would remove the account from the general fund by reporting a reversal, and then would report the addition in the other funds. Next, we'll go over the year-end reporting requirements. These include the accounts receivable performance measures, the certification of write-off, abated, and canceled debts, the LFO reporting worksheet, which is recommended for agencies to use, the agency year-end checklist, as well as the supplemental report to the Legislative Assembly if your LFO ending balance exceeds $50 million. So first, we'll discuss the accounts receivable performance measures. Agencies that are subject to submitting an ARPM, or accounts receivable performance measure, are agencies that are subject to the Oregon Accounting Manual. See OAM 1.05.00 if you're unsure if your agency is subject to the OAM. The accounts receivable performance measure policy can be found at OAM 356020. The reporting form is OAM 753512. Note that for purposes of the ARPM reporting, a receivable is defined in the OAM as when revenue is not recognized at the point the cash is received. And for this report, it does not include loans, notes, receivable, except for those amounts where a periodic payment became delinquent during the reporting period. So even if that delinquent amount was paid before the end of the reporting period. Once it was not paid on time, it was a liquidated and delinquent debt and is subject to tracking as a liquidated and delinquent account. So here is a view of the collections tab in the ARPM template. Total AR collections includes all collections that were applied to a receivable, regardless of the liquidation or delinquency status at the time of the payment. While liquidated and delinquent collections is the subset of that total AR collected amount that were applied to a liquidated and delinquent debt. Note that the total for the fiscal year in the ARPM should match the collections reported to LFO. If data from a prior quarter requires a correction, make the update for that quarter and include a note that the prior quarter has been corrected. Please review the data and adjust any targets as needed for the next quarter. Do not change prior quarter targets. The next tab in the ARPM template is the 90 days past due. Here you're going to report the value of the new AR established during the quarter and should include all receivables created, regardless of whether they were paid during the reporting period. Note there are entries that are not included in the ARPM, such as write-offs and adjustments, which reflect the AR outstanding. SORM recommends that using the agency comments to note any such transactions that significantly impact the AR outstanding. prior quarter total AR outstanding plus the current quarter new AR less the current quarter total AR collections should be relatively close to the current quarter total AR outstanding. So having that comment about any write-offs or adjustments that significantly impacted that balance helps us to understand why that change occurred. Again, if data from a prior quarter requires correction, make that update and include the note that a prior quarter has been corrected. Review your data and adjust targets as needed for the next quarter. Again, do not change your prior quarter targets. Annual performance measures include days to assign. So here you're going to report accounts that were assigned for collection to either the Department of Revenue or a private collection firm. And you're going to report the number of days from the MCAT eligibility date, which in OEM 354010 is defined as the latter of the following two dates: when the account became both liquidated and delinquent, or the date that the account exemption expires if it was subject to an exemption. This measurement should only reflect a time frame for the initial assignment, and if a subsequent second referral occurred for, say, a non-executive branch agency or an agency that is not subject to centralization through Department of Revenue, if that account was subsequently assigned to a PCF, do not count the days to assign for the second assignment, only the first time it was sent. Note that while this is looking at agency's compliance with the ORS 293231 requirement to assign, in this measure, if you had an account that was, say, on a payment plan, it met the MCAT date once it became liquidated and delinquent, when you typically would be establishing that payment plan, but you would not be subject to assignment under ORS 293 unless there is more than 90 days without a payment. So let's say there was 6 months of payments and then the payments stop. You could be reporting an account that's assigned at, say, 9 months. You are still compliant with the statute. In the ARPM reporting, the goal is for the agency to look at those accounts that are assigned after the 90 days to ensure that the condition, such as a payment plan, occurred and that accounts were simply not missed for assignment and the agency was non-compliant with ORS 293231. Finally, be sure to review your data and adjust your targets as needed for the next fiscal year. Again, do not change your data, your target from what was reported in the prior year. Days to collect. This is a measurement for only those accounts that became paid in full during the fiscal year. For purposes of this ARPM, the calculation is the date the account became paid in full less the effective date of the receivable, which is either the date that the state agency can recognize the revenue as described in OAM 15.35.00 or the due date of a delinquent loan payment. Note that the effective date is often identified as the date of an invoice or the date of a civil penalty order. Be sure to review the data and adjust the targets as needed for the next year, and do not change the current year target. And the last annual measure is on write-offs. Here you're going to include receivables that were determined to be uncollectible by management and have been removed from the agency accounting records for those accounts where the liability for the debt remains. Do not include accounts that were subject to discharge in bankruptcy were compromised or settled under specific agency authority. Note that the amount of the write-offs in the ARPM should be equal to the amount recorded at SFMA, if applicable, or reported in the annual comprehensive financial report. And this amount should be greater than or equal to the amount reported to LFO in the annual certification, which is limited to liquidated and delinquent accounts only. While these amounts may be the same, there can be situations such as a small balance that meets the criteria for write-off without becoming liquidated. Finally, review your data and adjust targets as needed for the next year, and do not change the current year target. The 3 remaining tabs in the ARPM worksheet are recommended but not required, with the exception of agencies that have a DAS exemption from the 90-day assignment, which must complete the collection ROI tab. Once you've completed the worksheet, it is to be submitted to SWARM via email at swarm@das.oregon.gov by October 1, 2024, or at the same time as the LFO report is submitted. If you need assistance with the ARPM reporting, note that there are training resources available on our SWARM website. The next report is the certification of write-off, abated, and canceled debts. This report is applicable to any state agency, officer, board, commission, corporation, semi-independent agencies. However, it does not include the Judicial Department, Secretary of State, State Treasurer, or the legislative branch agencies. In this report, you will include the following liquidated and delinquent account activity. The accounts that were written off during the fiscal year under OS 293240 refer to the OAM 355010 for the definition of write-off. Next, you will include the accounts that were abated during the fiscal year. With the definition we had earlier, this can include accounts that were discharged in bankruptcy. For purposes of this certification, the agency would also include accounts canceled by other agencies than Department of Revenue that have the statutory authority to cancel that debt. While in this form, the third box for accounts canceled by the Department of Revenue under OS 305 is only used by the Department of Revenue. Finally, you will certify that the transactions were processed in accordance with the applicable statutes and rules. And since not all agencies have a designated AR accountant, the person completing the form at the end of the year on behalf of the agency may sign as a preparer of the report. And similarly, the second line, do not get stuck on the definition of chief fiscal officer if your agency has a financial services manager or some other title that is okay to use. The goal here is we want a management review of the information and agreement that the transactions were processed under the applicable statutes and rules. Next, we'll discuss the LFO reporting worksheet. This is a resource that was developed to assist agencies to identify some common errors in their LFO reporting, as well as aggregating their data in a way that will aid with the entry into the reporting system. Use of this worksheet is not required, but highly encouraged. Note that the worksheet contains built-in formulas that will highlight cells in red and show an error if a condition is not true. Once all entries have been made, if these are still red, review the condition and look for an entry error. You will enter activity for each fund type, and the worksheet will automatically calculate an agency total. For purposes of this presentation, we will only be showing one column just so that the print doesn't get too small for the screen. So you'll enter an activity under each fund type. General fund is for reporting receivables that create revenue to the general fund, for example, a tax or a statute specific general fund. For purposes of this reporting, anything that is considered a reduction of expense, see OM 2540 for more information. Those should be reported as other funds. So here is section 2, which is the all agencies liquidated and delinquent accounts, regardless of whether they are assigned or exempt. This is everything for your agency that was liquidated and delinquent during the fiscal year. You will include beginning balance from the LFO website reporting in the prior year. You may obtain that information from the LFO website. There is a link for prior fiscal year data. You will include additions for the current year. This can include interest that accrued on the account that was part of your prior balance or included in your additions. You'll report collections. Accounts closed is a separate field because not all collections result in the account being paid in full, or a transaction such as an adjustment may result in the account coming to a zero balance. You would use the account closed to get the count correct to reduce the ending balance on the count. Note that this spreadsheet does not need a negative value for items like the write-off field or the reversals. Those are automatically calculated as a reduction. However, because an adjustment can either increase or decrease a debt, that field, if it is negative, does need the negative symbol included for the ending balance to calculate correctly. The next portion of the worksheet is section 3A, accounts assigned to the Department of Revenue. You will only include accounts that are part of your section 2. This is a subset of data that is in your section 2. And you will only include accounts here that were assigned to the unrestricted program. This is the full collections. Note that the forward to PCF is no longer applicable since 2020. Even if Department of Revenue and their inventory report shows that account is being sent to a PCF, that report is still included in section 3A by the agency for purposes of LFO reporting. You will separately report the number and value of collection fees that were paid either by the debtor or by the state agency in the applicable fields. Again, note that this is for unrestricted accounts only. Executive branch agencies that were subject to centralization and have accounts that are in a recommended for write-off or RWO status as of June 30, but the agency has not completed a write-off, those accounts should not be reported as returned to the originating agency in section 3A. This is because the account is still at DOR, even in the RWO status, and it should continue to be reported in the DOR ending balance until such time as the agency completes the write-off. Section 3B, these are accounts that are assigned to a private collection firm. And this is a subset of amounts that are part of your section 2, not including accounts that are forwarded to a PCF by DOR, but directly by the agency. Note for executive branch agencies, centralization, this forwarding to PCFs is now done through DOR. However, if you had an account that was assigned to a PCF prior to centralization beginning in 2018 and is still being collected by the PCF, you would report that account in Section 3B. If this is the case and you do not have any collections reported in this fiscal year, those accounts should be canceled from the PCF and either evaluated for reassignment to DOR or write-off as applicable. Again, you'll report the collection fees that were either paid by the debtor or the state agency, both the number and value of those fees. Section 3C related to accepted offers of compromise or settlement. You will only include data in this section where the account became paid in full during the fiscal year. And data reported here is all information regarding that account for the entire life of the account, not just what occurred in the current fiscal year. Current year activity is still reported in Section 2 and any other applicable section. This is only those compromised accounts where the account became paid in full and the legal liability for the waived portion now is instituted so that the balance of the debt went away, and that adjusting entry should also have been made. The next portion of Section 3C is on collections from on accounts that were due to an offset. Again, you will report the collections in Section 2, and you'll report the number and value of all of the collections received via offset during the fiscal year from any of the following programs. Federal Treasury Offset Program. There are a limited number of agencies where this would be applicable to. So if you're not expecting or know that your agency already has an established relationship with the federal treasury to perform reciprocal offsets, this would not apply to you. State of Oregon Vendor Offset Program. This is for Department of Revenue and tax debts only. You would only include data here as an amount collected if it was related to an intra-agency vendor offset, meaning that the debt that was owed was also an entity that your agency owed money to, and you applied that money that was owed to that entity against the debt that they owed to your agency. So do not include any amounts that your agency intercepted as payments and then forwarded to the Department of Revenue. Those are reported by Department of Revenue. Finally, the State of Oregon Tax Offset Program. This is a case where you would include both restricted program collections that are part of your Section 2 and your unrestricted program collections that are reported in Sections 2 and 3A. You would include that here as a payment from the tax offset. Next is Section 4, accounts due from current or former employees. Note that this should only be amounts where the debt was related to the employee's job, such as overpaid wages or travel. Note that any accounts that are currently assigned to DOR or PCF should also be reported in Section 3, or if the account is not assigned due to an exemption, it should also be reported in Section 5. This is simply a balance as of June 30th for any accounts that were from a current or former employee. Section 5, these are accounts that were exempt from assignment and were not assigned as of June 30th. So if an account was assigned and is part of your section 3A or 3B, do not include it as an exempt account as well. If you're reporting an account as exempt and it meets more than one criteria, use the criteria that most applies to that account. So once you've completed through section 5, you will go back to section 2, and there is the portion on unassigned accounts and doubtful accounts. Note that in the worksheet, the unassigned non-exempt accounts is a formula that has already calculated that number based on the entries in sections 3A, 3B, and section 5. So of the calculated unassigned non-exempt accounts, you will report any accounts that did not receive a payment for more than 90 days as of June 30th. Note if you include a value as non-exempt and unassigned with no payment for more than 90 days, you need to include a note in your LFO reporting that it indicates the efforts currently being taken by the agency to collect on those accounts, as well as if any accounts were previously assigned and returned, that can also be useful to understand that the agency is compliant with ORS 293, but the status of the account is based on the cancellation of the previously assigned account. Next, of the total ending liquidated and delinquent balance of section 2, indicate the number and value of accounts that the agency believes will never be collected. So you are doubtful to ever collect that fund, you would include it on the doubtful accounts line in section 2. Note that since the LFO report is the subset of liquidated and delinquent only, the doubtful that is reported here should be less than or equal to the allowance for doubtful accounts that is reported in either SFMA or the annual comprehensive financial report. Finally, it's the notes. Here you're going to capture whether or not the agency is subject to ORS 293231, and if so, include your statutory reference. If there were any significant reporting changes or large data variations from the prior year, please capture that here. It helps to note why data changed significantly. Could be a new program that the legislature established, or a anomaly account, such as a write-off occurred that lowered your ending balance that was, 75% of your prior year's ending balance. That one account, it's an anomaly compared to everything else. That's a large data variation. Include that information in your notes. And then again, if you have unassigned non-exempt accounts with no payments for more than 90 days, indicate if there were the number and dollar value of accounts that had been previously assigned and returned to the agency. Again, if you're an agency subject to centralization and the account's in RWO status, you should leave that in the section 3A ending balance if you did not write off that account. So it should not then be something that you have to capture here as an unassigned account. So you'll repeat the entry process for all fund types that you had activity or balances. Verify that the total column matches your agency's internal records, as well as verifying that the ending balance reconciled to your internal agency records, such as your DOR activity, PCF activity, so on and so forth. Note that your DOR activity or ending balances, for example, do not have to be exact. We look at the data from DOR as a way to verify the reasonableness of the information reported to LFO, but we do know that there are timing issues. Same thing occurs with a PCF. They collected money in June. You got it in July. It could be the July posting. So there's timing differences for both beginning and ending of the year. Finally, you'll use the reporting worksheet as a source document for entering your data to the reporting system or the LFO website. Next is the agency year-end checklist. So now that you've completed the various reports, the checklist is a tool to make sure that there are no issues in data between those reports. So any agency that is subject to the LFO reporting requirement under OS 293.229 sub 5 must submit a completed checklist to SWARM no later than October 1 to be eligible for the accounts receivable honor roll. So this is just a image of the top portion of the checklist. You will use the checklist after completing your reporting worksheet and before entering your data to the LFO website. And it's to help identify if there are any data issues between those reports that need correcting before making your LFO entry. For convenience, the items in the questions of the checklist are color-coded to reference the report where the data is to be found. Items 1 through 19 in the checklist should be marked yes, unless the agency is exempt from completing one of the reports for a specific question, in which case the correct answer would be NA. Any item answered no must include a comment that explains why that is the correct response for your agency. Typically, a no response means that there is a problem with one of the data elements in a report. Example of question 5 asked if the ARPM value of AR accounts outstanding is greater than or equal to the LFO reporting worksheet ending balance. Since the ARPM is asking for all agency AR outstanding and the LFO reporting is only the liquidated and delinquent accounts, the LFO report cannot be more than the ARPM. Next, you'll review the questions in items 20 through 22 to ensure the proper notes have been identified for the LFO entry, and verify the data from each of the respective reports when completing the year-end checklist. Checking the yes box and sending in the form is not the purpose of using the checklist or for DAS to require submission of the checklist. It is intended for the agency to use to verify the data in the questions in the report submitted. Lastly, supplemental report to the Legislative Assembly. This is applicable only to agencies that have a liquidated and delinquent account ending balance of $50 million or more for this fiscal year. And the agencies must submit the additional report to the Legislative Assembly no later than December 31st. And it describes the major categories of accounts, circumstances under which the agency writes off, adjusts, or removes an account, actions taken by the agency to reduce your liquidated and delinquent debt, and a plan for future actions to reduce your liquidated and delinquent accounts. Questions about this report should be submitted to the agency's LFO analyst. Next, we'll discuss the LFO reporting overview and website entry. This is applicable to agencies in the executive branch, judicial branch, semi-independent agencies, public universities, and the special agencies identified in ORS 293. Agencies are required to report to LFO if any of the following conditions apply. The state agency had no liquidated and delinquent accounts to report. You still submit a report that says you had no accounts. If the state agency had reported an ending balance in a prior year, since that ending balance is automatically carried forward to the beginning balance of the current year, you still need to report even if there was no new activity in the current fiscal year. Finally, if an agency had any accounts that became liquidated and delinquent, even if that amount was collected, assigned, returned, abated, canceled, written off during the fiscal year, and your ending balance is zero, you still report the activity as an addition, collection, abated, etc. You still have data to report. The Swarm Research website provides links to the LFO reporting website, as well as the LFO reporting manual, which includes a field-by-field definition of data to be entered. So for the website entry, we'll go through the process of logging in and the process for agencies with nothing to report, as well as agencies with data to report. Logging into the LFO website, you will select your agency from the drop-down menu. You will enter your agency password. Note that the password does not change from year to year. So if you have the password from last year, it is still that password. The password is simply an effort to avoid accidental entries to the wrong agency and establish some minimum security protocols to prevent data issues from external sources. Lastly, you will click Log On. If you don't know the agency password, you don't have it from the prior year, you're new to reporting, and you need the password, there is the Request Password link in the lower right corner of the screen. This will create an email to the Legislative Fiscal Office. You'll answer some questions about your agency, number, name, etc., and they will reply with your agency password. For agencies with nothing to report, you would use the Nothing to Report button only if you had a zero ending balance in the prior year and did not have any liquidated and delinquent account activity during the fiscal year. So after logging into the website, you click the Nothing to Report button. A pop-up box will appear for you to confirm that you have zero ending balance in the prior year and did not have any liquidated and delinquent account activity during the fiscal year. So once you confirm, the system will produce a receipt over your report. You can do a screen print for your records before clicking the Log Off button. And if you're an agency with nothing to report, that is all you need to do to submit your entry of nothing to report. So next, agencies with data. If you had an ending balance greater than zero in the prior year or had liquidated and delinquent activity during the fiscal year, you will enter the data to the appropriate fund type. Refer to your reporting worksheet for the fund types and number and values to be entered in the LFO report, and the LFO reporting manual for additional definitions and instructions for each field as needed. So once you've logged in, you will select the fund type from the drop-down menu. You will click on a specific fund type, and then you will click the Create Fund Report link. Note that you only need to create a fund report if you had data for that fund type. If you do not have information, say, for federal funds, you do not need to create a federal funds report. You only enter data for fund types that you have data for. So since we've discussed specifics in the LFO reporting worksheet section of this training, we'll go through this very quickly. Here is section 2 of the report portal. You will enter the data from your reporting worksheet to each section. The beginning balance is automatically populated based on the prior year's ending balance for that fund type. And you'll note that as you enter data, the ending balance will automatically calculate based on those entries. Again, the adjustments field is the only one that requires a negative symbol if the total adjustments are negative. Also, be sure to, if you entered data, use the tab button on your keyboard to move from cell to cell. This will ensure that the system prompts the recalculation of the ending balance based on any entries. If you don't tab, it won't trigger that recalculation, and you can end up with a difference from your reporting worksheet to what is on the portal. So section 3A, you will include your activity that's been assigned to Department of Revenue for the unrestricted accounts only. Again, note that the forward to PCF for agencies subject to centralization, this is no longer used. It is still part of the portal, but you would not put data in that section. Section 3B, include the accounts assigned to a private collection firm. Section 3C, enter your data for accounts that had an accepted offer of compromise and settlement and the debt was paid in full during the fiscal year, as well as your collections due to offset. Remember that the tax offset program here includes both the restricted and unrestricted programs at DOR, and those values should also be included in section 2 and 3A for the unrestricted program. Section 4, enter your values for accounts due from a current or former employee. Again, this is limited to only accounts where the debt is associated with the employee's job, such as a wage or travel overpayment. And finally, section 5, the accounts that are exempt from assignment, again, only including those accounts that were not assigned and included in section 3A or 3B and meet a exemption criteria. Lastly is the notes field, and you will enter any of the required information, such as if the agency is exempt from the assignment provisions of OS 293, if you had significant reporting changes during the year, or if you had a value greater than 0 for the unassigned non-exempt accounts with no payments for more than 90 days. You'll include the number and value of any accounts that were previously assigned and returned to the agency, as well as your current actions being taken by the agency to collect on that debt. So once all of the entries for the applicable fund type are completed, you'll click the Save button. This will go back to the top of the page for an action confirmation to appear. And after initially saving, you will see the Edit and Print options appear. You can use the Print button to get a PDF copy of the entries and or to print a copy for your paper files if you need to. If you have data for additional fund types, you would click the Home button and return to the system entry screen from screen 1. And you would repeat the steps in slides 55 through 63 for each fund type that the agency has accounts. Again, it is not necessary to create a fund type with all zeros. Once all of your entries are complete, click the Save button. This will return to the system entry screen by clicking the Home button. Click the Finished Reporting button. This tells the Legislative Fiscal Office that you have no more entries to make and that you are considered done with your reporting for the year, and then you can log off. Note that clicking the Finish Reporting button does not prohibit you from coming back and making edits after clicking the Finish Report button. It is just simply a system notification to LFO. So next we'll discuss some common reporting errors. Those include an ending balance error. This can occur if you don't tab from field to field in the LFO website. If your Section 2 balance is less than the total of your Sections 3A, 3B, and Section 5, that is a mistake. Section 2 is everything for your agency. The number of accounts field is blank for all fund types. The LFO requires both a number and value of accounts. And we'll discuss in our scenarios if you have debts that are comprised of multiple fund types, how to make those entries so that the count is correct across all fund types entered. If your account balances do not reconcile with Department of Revenue or your private collection firm reports, that is a common error. Again, we look for how reasonable is the information being reported, not an exact match to what data we receive from DOR or a PCF. It is an error if your notes section do not include the required reporting information. Also, if the finished reporting button is not clicked, as well as the reporting manual instructions are not followed. Next, we'll discuss some LFO reporting scenarios. These slides are provided for training purposes only, and these do not represent all possible combinations of fund types or assignment combinations. They are simple examples, very simplistic entry examples of various scenarios to hopefully answer any questions that you may have about accounts that you need to report. First is a new liquidated and delinquent account, and it was paid during the year. So when the account became liquidated and delinquent, it is reported as an addition. The account became paid during the year, so you report the value of the collections, as well as that account as closed. Because it's now paid in full, you need to remove the count, and you do that through the account's closed field. Note that the ending balance is 0 in this example because the account was paid in full. Our next scenario is an account that was assigned to DOR. Here you have an addition in Section 2 because the account became liquidated and delinquent. It became subject to assignment and was assigned to DOR. So in 3A, it is reported as an addition as well. In this example, DOR collected $100, so you report the $100 collection in both Section 3A and in Section 2. Next, you have an account at DOR with an RWO status, but no write-off was recorded. So here you have the account from the beginning balance in your Department of Revenue. However, because the account was in RWO status and no write-off occurred, you don't need to make any further entries because the account is still at DOR and you have an ending balance of the one account for the $1,000 as of June 30th. Next, you have an account at DOR with an RWO status. However, the agency did perform the write-off. So again, you have a Section 2 beginning balance and a Section 3A beginning balance. The account was identified as RWO, and because it was written off, You would record that as return to originating agency in section 3A. Note the 0 ending balance. And then the entry in section 2 for the write-off of that account. And again, note the ending balance is 0. Next, we have an account that was previously written off, but had a current year collection by DOR. So because the account was previously written off and the debt needs to be reestablished to be able to post the payment, it is an addition in both Section 2 and Section 3A. Next, the payment that DOR received can be applied in both Sections 3A and Section 2 as well. Note that since the account was liquidated and delinquent at the time of the write-off, it is still liquidated and delinquent after being reestablished. Again, note that the ending balance is matched between Section 2 and Section 3 for purposes of this example. Next scenario, we're going to show accounts that had PCF activity. So there were 2 accounts that had been assigned to a PCF by the agency during a prior fiscal year. So you have a beginning balance in both Section 2 and 3B. The PCF collected the $300. So you're going to report that in both Section 3B and Section 2. And in this example, you had an account that was returned to the agency and written off by the agency. And so that's going to be reported as return to originating agency in Section 3B and a write-off in Section 2. The ending balance matches between both Section 2 and 3B in this example. Our next scenario is an amount due from a current or former employee. And you had an account that became liquidated and delinquent during the fiscal year. So it's a Section 2 addition. And for purposes of this example, we also sent that account to Department of Revenue. So it's an addition in Section 3B. DOR collected a partial payment during the year. So you're going to report that amount in both Section 3B and Section 2. And note that the ending balance of $550 in Section 2 and Section 3A is then reported in Section 4 as the amount due by the current or former employee as of June 30th. Our next situation is an account that had interest accrual. So you have an account where the interest is included as the addition for the dollar value only because the account is already part of your beginning balance. So you have an ending balance of $872, and for purposes of this example, the account was not exempt from assignment, and it was assigned to DOR. Note that because the account was assigned during this fiscal year, the addition is for the amount of both the original debt and the accrued interest. Our next scenario is an account where the agency compromised an account and it was paid during the fiscal year. So here was an account that was originally $4,500 and had accrued interest of $500 as of June 30th of the prior year. So the Section 2 beginning balance is $5,000. Section 3A would report the original debt of $4,500. During this fiscal year, there was another $100 of accrued interest that is reported as an addition in Section 2. So the cumulative interest is $600 reported in Section 3C. The compromise was for the debtor to pay $3,000 and the agency would waive $1,500 of the original debt and the accumulated interest. So in Section 2, you would report the collection of the $3,000 And in section 3C, the net settlement received is $3,000. That was the amount that the debtor paid. So next, because the agreement was for the agency to waive the $1,500 of the original debt, as well as the now $600 in accrued interest, adjustments of negative $2,100 is recorded in section 2, as well as the count for the account closed to end up with a zero ending balance. The amount of the adjustment then gets calculated in section 3C as the variance. This is the amount that the agency agreed to compromise. Our next scenario is a collection due to offset. Here we have an account with a beginning balance in section 2 and section 3A. The offset of $350 is reported in both section 3A and section 2, and in section 3C as a tax offset program. Next is an account exempt from assignment. Note that you will only include accounts that are not actually assigned to DOR or a PCF. So here we had an account that became liquidated and delinquent during the fiscal year. So it's an addition in section 2. And because in this example, the debt is owed from a state agency, it is exempt under OS 293231. And section 5 would show the category of that exemption for the balance of that account. And note that the total exemptions for the current year match the ending balance. Next is an account that was comprised of multiple fund types. So in this example, we have a $5,000 account that is comprised 60% federal funds and 40% other funds. So in this case, you would put $3,000 as federal funds, and note that the count for that one account is reported in the fund type with the higher percentage. Any collections that are made are also applied in the same split that they were in the additions. Verify that the total of all fund type entries match your agency record. So next steps. What do you do now that you have all this information? You've completed this training. You'll evaluate your fiscal year liquidated and delinquent account activity. You'll review the LFO reporting manual as needed. Complete your LFO reporting worksheet, which is recommended. You'll complete the agency ARPM report, if applicable. You'll complete the agency certification form, if applicable, and complete the agency checklist to verify data across all reports. Enter your data into the LFO reporting system, and then email the completed LFO reporting worksheet if you used it, along with your ARPM report, certification form, and agency checklist to swarm@das.oregon.gov for review. The target date for the AR honor roll is to submit that email by September 16th to allow sufficient time for SWARM to review the information and respond to the agency if there are possible corrections. The final deadline for submission is October 1st. And lastly, if your agency reports an ending balance of 50 million or more, you would submit the supplemental report to the Legislative Assembly by December 31st. If you have any questions after reviewing this training, please feel free to contact Gerald Floyd at the information provided here. Thank you for attending today's training.